All right. Hey, everyone. Mark here. Mark B Markets. Thank you for joining me for another Bitcoin video analysis. You can see my new background. I made a mistake. I just realized I made a mistake with the scheduling of the time. It's supposed to be 3:05, but I mixed up the hours, it looks like. So it looks like I was scheduled for 2 hours from now, but I meant now. So sorry about the inconvenience, guys, but this is my normal streaming time. I'm just making some adjustments here. So as you know, I've relocated, and you can see I don't have the blue screen behind me anymore. And I'll be improving on this background. Hey, Savi, how are you? I'll be improving on this background as we go and stuff like that. All right. So we have a lot to talk about. If you're new to the stream, welcome. Let me explain to you briefly how this works. So first, I'm going to go over the economic calendar so we're aware of what's going on this week so that it can help you mitigate risk. Second, we're going to go over today's topic, which is risk analysis on Bitcoin, which is something that you should be pretty good at because that's all that really matters is risk. So we're going to talk about that and this Bitcoin situation, which I've been writing about. And then third, we're going to use the Trade Scanner Pro to find some day trades to see if we can find some trades here in this situation. All right. Hey, what's going on? So I had a chance to meet Savi a week earlier. A few days ago, we had an event in New York City, and I got to meet him and another guy, and it was a good time, man. It was really nice meeting you, Savi. It was a lot of fun. He's a great guy, and we had a very educational session that we got to sit through. So again, I appreciate you coming to that event. That was a lot of fun. Malad, there you are. All right, there's the guy. That's the other guy. Malad is the other guy that came out to the event, and it was at the Bloomberg location over on Park Ave in the city. What a good time, man. It was a great time. And, next time, any type of other event that comes up like that, I'll let you guys know. And, yeah, we could do it again, man. Yeah, no problem. No problem. So I really appreciate you guys coming. It was a lot of fun. So I explained if you're new to the stream. Also, as a fun fact, if you want to share what city or what country you're from, that's always cool. I'm streaming from the greater New York City area, also known as Northern New Jersey. So I have pretty quick access to the city, and that's why I was there a few days ago. So anyway, cool, guys. So I hope you like my new setup here as I go along. Like I said, it's going to improve. Anyway, so let's get into this here, shall we? First things first, if you like the stream, please press the like button. Please subscribe to the channel. It helps. I have things coming, and I need, the support is always helpful. Also, check the links in the description. I just want to explain what they are very quickly. So first, we have the 14-day free trial for the Trade Scanner Pro. You can click on the link there. We'll talk about that when we get to it. We also have free signals that come out each day. All right. So we have trade of the day. It's based on the formula of the Trade Scanner Pro. It's the same strategy, except a bot sends out an email. So you can subscribe to that. It's free. There's a link in the description. Also, we have a Discord community. All right. So we have a few people in there that can answer questions and things like that. If you have a hard time with the Trade Scanner Pro, we have a support channel there. So there are some resources there. You can check that out as well. Also, if you're interested in Bybit or MEXC or the TradingView premium version of their software, we have some affiliate links. Check those out as well. Those affiliate links belong to Stian. So any type of, if you sign up for anything, it goes a long way into helping him and supporting the community. Okay, so appreciate that. Also, if you're feeling generous, it is now the holiday season. Everyone's feeling generous, right? There are some wallet links or wallet addresses in the description as well. Those go to Stian if you want to, give him some a special thank you without having to subscribe to any of these other products. Feel free to do that. Okay, so cool. Now let's get into first the economic calendar, right? And then we'll talk about the charts. Now, everyone, I want to mention, in case you don't know, this is a holiday week. Okay, so today's Monday. On Thursday, we have in this country, we have Thanksgiving. That's a big deal. All right. And it's a big deal because by Wednesday, volume will dry up. That's typical behavior. I've seen this for 20 years. What happens is, today, tomorrow, you see some action, but tomorrow, after noon, tomorrow, don't even waste your time. Okay. I'm not even going to look at my charts after that because you're just wasting your time. Typically what happens, what I've seen year after year, is you get the slow grind going higher. I've seen that many times, but really, if you're going to get involved, just paper trade. It can be very erratic. Low volume environments are harder, and they're very, I mean, you want to talk about random. So I would encourage you to use that time to basically work on your, paper trade, learn something, just take a break, do something else, right? Just get your mind out of this for a little while. Just do something to refresh yourself, right? Of course, Wednesday is the biggest night out of the year here in this country. Everyone goes out on Wednesday night. Everyone and their cousin goes out somewhere on Wednesday night, except for me. But everyone goes out, right? Because the next day they could drink a lot, they could sleep in the next day, and all that, right? So keep that in mind. That's where everyone's mindset is here in this area, at least. So, and that kind of affects the market in general. Now, there is really one report worth mentioning on the economic calendar this week, because I saw there are a number of things. I'm not going to pull up the calendar here, but there are a number of things. Like I saw some Fed, some bank governors coming out from some other countries, right, with their speeches. All right, that's not going to really move the markets. I saw a few other things like CPIs from other countries. Again, unless you're in those specific Forex pairs, I would not worry about those numbers. Those are not dollar moving numbers. Those are not bond moving numbers, right? But we do have one number, and it's core personal expenditures, or core PCE, I believe is the number. And that number comes out on Wednesday. I don't know exactly what time. You want to double check the timestamp. The reason why that number is worth mentioning is because the Fed uses that number. They look at that number when they're making their, when they're figuring out what they're going to do with interest rates and stuff like that. So I've heard that number thrown around a lot in recent time. So that could be a market moving number, right? If there are any surprises in there. So please be aware of that number, particularly if you day trade, because that's really where you could see the effect, like on the S&P or something like that, and it can have a dramatic effect on the day. So please be aware of that. But that's the only number worth mentioning. We don't have non-farm payrolls this week. So obviously, because, the holiday, these guys don't want to do any work. They all want to go away somewhere, right? So obviously next week, we're going to have non-farm payrolls and all that stuff. So please keep that in mind. That's really all that's worth mentioning on the economic calendar. Now, let's move along to the chart, shall we? And I will make the chart bigger. How's my sound, by the way? Is my sound okay? No, Milad. No, we're not that eventful. We walked back to the train station, and that was that. Savi let me off at the pass station, and I went back to Jersey. So you had more of an exciting night. Okay, so here, let me move my let me make my chart bigger over here. Okay. So, okay, cool. So, yeah, so let's talk about this analyzing risk for Bitcoin. And basically what I'm doing here, you can apply to any market. I talk about Bitcoin every week because it's basically the main market, right? It's like the number one of the coins, and its movements can affect other coins. Although it's not a one-to-one relationship, but you want to be, if you're going to be messing with altcoins, whether you're investing, whether you're if you're doing swing trades, you should be aware of what Bitcoin is doing on a technical level. Now, all these people that get caught up with all this nonsense, I don't know if you guys have noticed, but it's all over YouTube, right? You have every other video about Bitcoin has a picture of Michael Saylor on it. Like, oh, Michael Saylor's doing this. Oh, Bitcoin's going to be $10 billion by next week. If you get sucked into that, I cannot help you. Okay? It's very important that you need to understand when the whole world is bullish, and it looks like it's going to go up forever, that is when your risk is the greatest, just from a psychological perspective. This is extremely important to understand. It's a contrarian point of view. The average retail trader usually does not understand this. So I get criticism because I'm warning people of the risk. And this is the criticism that I typically get. This, oh, you told me it was going lower, so I stayed out, and now it's 10,000 points higher. I should never listen to you. Right. But the thing is, I look at risk. And my whole premise is, if you can't take the heat, don't play with the fire. Because people don't think of the risk. They only think of, oh, by next week, this is going to be 200K and I'm going to double my money. That's all people think. Meanwhile, how much are we off the high right now? Let me make this chart a little bit bigger real quick. How much are we off the high? The high was 99,860. We can count that as 100K. I mean, it was only 180 points off, whatever it was. We can say it went to 100K, right? Even though that's not the exact number here. Where are we right now? 94,889. So if you bought, oh wait, I have so 99,860, and the low here is 94,427. We're at 94,9 whatever, right? So what is that? 5,000 points so far? This is nothing, by the way. Bitcoin has not begun to pull back yet. We're minus 3,000 on the day. This has not even begun to pull back yet. This is nothing. This is what I mean about risk and evaluating risk. Now, on my TradingView article, I've been writing about pulling back, right? And that's why my articles have been very unpopular recently. I was calling for pullbacks here. I was calling for pullbacks in this middle area before we got there, because 95K was a resistance that I was anticipating. But the thing is, I don't forecast markets because I don't pretend to know the future like so many people. I look at risk, and when something is pushing highs or all-time highs, I will always be cautious, and I will always say, not a good idea to buy the high. I will always say that at highs, okay? Because over many, many trades, that is usually the better way to go. I look at this more of like a poker game. Certain hands typically have a better probability of a positive outcome over many hands over time, right? So if you get pocket aces before the flop and you go all in, you have a better chance of winning with that over time. You're not going to win every time, but over time, that's the way to play that hand typically, right? If you're a beginner. So that is how you have to look at something like this. When something is pushing highs, I don't care what the news is. I don't care what people are saying. That's the worst information you can use, because it just gives you a false sense of confidence. You have no idea what's in front of you. When you have these clowns like Michael Saylor and all these other people, right? All these Bitcoin bulls, they're coming out at the top and they're like, oh yeah, oh, this thing's just getting started, right? Usually these are the guys that are selling it to you. They use the herd, right? They attract them. They say a lot of positive stuff because they know that's the only way they can get out of these large positions. Typically, that is how it works. This is nothing new. It's been like this forever, right? That's how it works. So if you're still, I know most of my followers aren't fooled by that because you listen to me every week. But if you're new and you're just watching this video and you're like, oh, that's why I lose every time I buy at the top. Occasionally you will win, right? You will win on the outlier. This move on Bitcoin since the election, where was the election? The election was over here, right? Since the election, this thing has gone up about, what, 30,000 points almost, something like that. That is an outlier. It is unusual. It is not typical behavior, right? As a trader and investor, I'm interested in typical behavior, because typical behavior allows me to anticipate opportunities that repeat themselves. Because what is actually repeating? Human behavior. So I want to capitalize on the repetitive mistakes of everyone else. That is my goal. So in order to identify those errors, first of all, I have to kind of know how the market works on a very intimate level, right? And that's why I look at risk first. So analyzing the risk. So that's my rant. If you want to read more about my rant, you can look at my TradingView article. But I just want to let you know, if you're one of those people that says, well, every time it goes higher, you told me not to buy it, and it just keeps going higher, go ahead and buy. If you can't take the risk, don't come crying to me, right? When it pulls back 20,000 points and you're stuck in it, don't come crying to me, because that's the risk you're taking. If you can handle that risk, by all means, go for it. You know, one thing you can do, if you want to buy the top or buy near the top, like you could have bought at 90K, for example. and it went to 99K. Chances are you're still in it because you don't know to get out at 99K, right? And now you're going to watch this thing. If it goes to 85K, you'll be like, oh, I don't know. Oh, I hope it comes back. And it may come back, but that reinforces a bad habit, right? And there's going to be a time where you do the same thing. You buy something, it pulls back. You hope it works, right? But there's going to be the time where it doesn't work. And that time, you're going to give back any profit that you made this one time or whatever, you're going to give it back. Believe me. But you don't have to listen to me. The market is a much more effective teacher than I am. So more expensive too. So anyway, that's what I'm going to say about that. Now, as far as the risk on Bitcoin, like I mentioned earlier, this thing is just, you want to talk about getting started. This is really not much of a pullback here. This is tiny. Okay, so if you're like nervous about this, I don't know what to tell you, man, because here's the thing. These rectangles that I drew on my chart, these are the nearest realistic support zones. And as you can see, I drew this illustration here from my TradingView article. I drew this here because this is the scenario that I anticipate. Now, like I said before, I will be wrong a lot. When you have a situation where the market keeps pushing new highs, new highs, new highs, new highs, I'm going to be wrong a lot because I'm going to be very cautious. And I'm not going to buy something high and hope it goes higher like everyone else. I'm going to step back. Now, when I talk about these type of decisions, I'm talking about swing trades and investing. As a day trader, there's tons of opportunity here on both sides. As a day trader, I mean, I've been messing around with some of these, like in this price action over here when it was working its way up here, there was just tons of stuff to do, right? Long and short. So the great thing about being a day trader is you don't expose yourself to the large magnitude of risk. This is a daily chart that I'm showing you here, right? So again, as far as risk analysis, the question that we have to answer is, well, how far can this thing realistically pull back and still be strong? That is something you should be concerned with, especially if you got long recently, right? This is my first support. Now, this zone is a support zone, which means it can turn anywhere inside that zone. But typically when I draw those zones, I like to look at the midpoint. And that's where my illustration draws. That's where I drew my illustration to, basically the midpoint area. All right, which is what? Around 90, 91, 9, 92. So like 92K to 90K, somewhere in that zone. Here, let me draw a little square in there, right? Somewhere in this zone would be like the sweet spot. That would be the ideal place for a reversal. Now, a key thing, when I write my articles on TradingView, my hope is that you can use that information as a guide. Right? It's not a forecast. You can't buy something just because I say something is, bullish, blah, blah, blah. Or you can't just go on my illustration and expect this to work like this. That's just one scenario of many possibilities. So I'm looking for a confirmation. The confirmation, right, Savi? The confirmation is what lets you know that the market is more likely to follow my anticipated scenario. The confirmation, I have to emphasize that, because if there's no confirmation, my scenario means nothing. That's what a lot of these beginners, they just don't understand. They see a line and they're like, oh, I expect that line to follow just like that. Markets are random. And if you don't understand that, you're really going to have a hard time. Right? So I encourage you to learn what efficient markets hypothesis is before you do anything else, if that's you. So if we get confirmation, that increases the chances that the next move will be as anticipated, which would be a test of high. Now, will we make a higher high? Possibly. This is a higher low. So in theory, this should be a higher high. In theory, but there's no guarantee that it will be. You have to take the chance. Right? So usually a good thing to do is you wait for confirmation here in this area. It could be in the form of a pin bar. It could be an inside bar. It could be an outside bar. But some form of confirmation. The Trade Scanner Pro can give you a confirmation. That's what its job is to do. And then you reach your first profit objective, and then you try to hold on to some for the breakout and try to see if you can give the broader trend a chance to make the higher high. That's how I play this game. So I don't sit there and say, "Whoa, it's strong. It should make a higher high." Yeah. It should, but if it fails, hey man, I'm the first one to get out. Right? That's the open mind you must have as a swing trader, as a day trader. Investing is another story, right? As an investor, these are not good levels to invest in. There's never really a bad level, but what I should say is these are high risk levels. So if you're going to be investing up here, hopefully you've been buying at much lower prices. If you haven't, then you should be investing the least amount of money up at these levels because they're high risk, right? Remember those charts I used to go over a while back where I used to show people, by level, we would go by the risk. I mean, look, this is a weekly chart over here, right? This is a weekly chart. You mean to tell me you're going to invest up here? What happened to here, right? How come no one invests here? When we were at 50K, the 3 times that we were this year, I told people, and many of you have been in my stream, I told you every single time, that's an investing opportunity, okay? That's when you want to lay into it with a little bit more money. Not everything you got, but your standard allocation that you've determined in advance, right? Now, not at these levels. So where's the next investing level? Possibly the old all-time high, 73K, mid-70s, low 70s. Those would be attractive levels, okay? For investment, to have a larger investment, not up here. This is the weekly. If this weekly gives us this red candle, I mean, today's Monday. We have a whole week for this candle to close. If that low is taken out, we could be in pullback mode. Now, again, as far as risk analysis, we can pull back. I'm going to tell you right now, 90K, this area is the first area I'm looking for, and that's for swing trades or day trades. If that area breaks and we push below 90K, that opens up this area, which is like basically mid to low 80s. If we can't find support in that area, because again, this all depends on confirmation. If we cannot confirm, then this thing may have more weakness ahead of it. That's how you have to look at that. It may have more weakness ahead of it. Now, it's worth mentioning the wave count in this situation, right? If you're not familiar with wave counts, you should learn that stuff. Now, here's the way I'm looking at this wave count, because this is a weekly, right? I'm not going to put the numbers on my chart. I'm just going to point out the waves, right? This is your wave 1 back here. This is your wave 2 consolidation over here, right? This area. This is your wave 3, this big move here, right? The consolidation that we've been in since March was our wave 4, which is typical, right? And wave 4 is not overlapping wave 1, nowhere near it, right? So the bullish structure is still intact. And this is our wave 5, right? And inside of our wave 5, we can count basically what? From the bottom here, we can count this as the bottom right there. 1, 2, right? This looks like we're in a 3 of that 5. So we're anticipating a 4. A 4 should not overlap wave 1. Where is wave 1 again? If we're going to use this little area right here as wave 1, right, this is the bottom of wave 1. This is the top of wave 1. That means wave 4 should not overlap this area right here. That's a lot of room to play around. Okay. So, but the thing is, usually like on such a magnitude, you may get some sort of there's like this thing where if wave 2 is sharp or brief like this, wave 4 may be elongated. It's a tendency. I wouldn't put a lot of weight on that, but just watch out for that. Maybe we get like a little mini consolidation for the next week or 2 or something like that before one more leg higher. Okay. One more leg higher, which can take us to the actual 100K. Right? Something like I've drawn here. One more leg. Maybe we go a little higher, something like that. But I'm going to warn you right now, on that leg, you're going to see the hype probably at its greatest. Michael Saylor coming out in every single video, MicroStrategy, blah, 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 all that nonsense, right? That's a place to take profits. Lock something in. Sure, you want to try to hold on to some, but if you've been investing, especially if you've been investing since like 50K or 60K, take something off the table. Don't let greed pollute your decision making. And here's why I say this. after 5 waves, typically we get our next corrective cycle. Typically. Now, a wave 5 can extend, of course. There's no precision to this, but it's a general tendency. How many of you guys remember in 2021, 2022, I was making the same type of assessments across all the altcoins, and people are like, yeah, these things are going to go up forever. And they gave back 90% of their value, right? Because once 5 waves are complete, a corrective wave is more likely, a broad corrective wave, which means, I was looking on Bitcoin, right? Some previous corrective waves. Let me just point something out here. Let's go back to the weekly real quick. Because again, this is all part of the risk analysis, right? I was looking at this corrective wave back here because I remember calling a similar situation back here. Remember that? This goes way back. This corrective structure was like a year, okay? That took a year to play out. A year, that corrective cycle. And as you can see, during that corrective cycle, there were some attempts to reverse, okay, on this weekly chart, which can be very confusing. So just keep in mind, if we get a corrective cycle here in this area, starting, maybe in the next few weeks or something, and this thing completes its 5 waves, right? After it does its wave 4, makes its attempt for the 5 of 5. Once that's in place, watch out for the broader corrective wave. That could be something that plays out next year. I don't know. So here's how I use that information. I'm not going to sit here and short Bitcoin and be like, oh, it's going to zero. No, but I know one thing. The risk of a corrective cycle is greater. I don't want to be putting all kinds of money into this thing now. If I'm going to do so, or if I'm going to invest larger amounts, it should be at better prices, meaning lower prices, right? So, and now those prices I want to have on my chart in advance. So basically that's what these lines represent here. And realistically, 70Ks, 80Ks, those are going to be the first areas, right? If for some strange reason this thing breaks like below this area here, then I would just hold off, right? Because it can, for whatever reason, some unexpected news, some catalyst can come out that no one was expecting, and Bitcoin can have a more pronounced corrective move. I don't know. What I'm saying is you have to be prepared. Hey, Dijon, how are you? Alex, how are you? Alex, we were almost at 100. You missed it by like 150 points. Okay, so you guys following me on that? So do you understand where I'm getting what I'm getting at with this risk assessment idea, right? Because I mean, the title of today's thing is risk analysis, right? We're not looking at projecting the future and say, oh, in 3 months it's going to be at 150K. You could there's a million YouTube videos that you can watch that will tell you that. I'm only interested in what I can lose, right? Savi mentioned that when we were meeting. Savi even said, yeah, you really need to know what you can lose. Forget about what you can win. That's easy. That's a gift. It's what you can lose that's going to cause problems. And you need to know what that is, right? And be prepared for it. If you're prepared, that situation can be a nice opportunity for you, all right? And that's really like the point here. So assessing the risk really offers you a window into the pain of other traders. When they bang it out, that is when you want to step in if you're going to take risk. Again, like I said before, this is all about how much risk you're willing to take. And if you have an idea that this area is higher risk compared to this area, then wouldn't a test of this area be an opportunity? Yes. It would be a greater opportunity than where we are now. The thing is, when we pull back, right, markets don't go in a straight line forever. They cycle. So I don't know when it will pull back, but let's just say the market offers that opportunity and we pull back into this area. Typically, there's some kind of news behind that, some kind of catalyst behind that. And a lot of people who say, oh yeah, I'd buy there in 2 seconds. Right now you would. But when we get there, usually there's some kind of negative news in your face and you're like, oh, I don't know. I think I'll wait, right? And then you want to wait for it to look good again. But that's, again, when your risk is higher. So what do? You wait for some form of confirmation And you're still taking a risk, but a lower risk, because if this main trend stays intact, chances are you'll see that positive outcome. Now, a big part of this game, of course, is knowing where to take profits, right? TradeScanner Pro helps all that stuff. We'll talk about that in a moment. But when you're dealing with the bigger picture, you just want to look at previous levels, right? Or some relative proportion of previous levels. So let me just get rid of some of these things here, right? So we can avoid the confusion. If you get that pullback, right, you could take a fib, right? A fib retracement. Okay. You could measure if we get that pullback. Let me just draw like a little pullback here, right? So if we get that pullback into this area, something like that, and you get a confirmation and it starts to do this, right? You're like, okay, where do I get out? You can simply take a measurement. You can like measure from this high to whatever that low is, okay? And you will have proportions. And these proportions give you reference points where to take something off the table. You don't take everything off the table, especially if you're on the right side of the trend, which is right now clearly bullish. You want to give that trend a chance to explore new highs or whatever. So you have some points of reference to lock in something. And you should get in the habit of doing that. If you cry because you left money on the table, I can't help you with that. That's greed. Okay. So do you understand? Any questions about how I assessed the risk here? Does it make sense? I want you to walk away from this, be like, okay, so basically you're saying it can pull back to 90K, it can pull back to 85K, it can pull back to 80K. That's the risk you're facing. We don't know how far it's going to pull back, but that's the risk you're facing. And you're either okay with that, right? You're watching this thing pull back right now. If you're long from a bad price, I'm sorry, I can't help you. You're waiting for a better price right now. This thing is nothing but this is a daily candle. It's a red candle, which means we open tomorrow. We take out this candle low. It's possibly going lower. We get a green candle. Maybe it's turning around. But these levels, like I said, in general, are higher risk levels. So consider smaller size or smaller time frames to mitigate the risk of being involved at a higher level. If we can test lower levels, more attractive levels, that's where you can consider the swing trade. You can have a greater expectation based on the confirmation that you get. Okay, that's basically the summary of the whole thing. You guys following me so far? Any questions? Any questions? I don't see any questions. Okay. Now, all right, so are we good? So that's the risk analysis, and you should do this on every coin, every asset that you own, even if it's a stock. You can do it too with a stock. I mean, you should be doing this with everything. And by the way, speaking of stocks, I gotta point one thing out here, which a lot of people just don't pay attention to. I know Alex pays attention to this, but a lot of people don't pay attention to this. This is the 10-year note, okay? Treasuries. These are the prices, right? The Treasury note futures. And as price goes lower, yields go higher, right? It's an inverse relationship. So right now we see a little green uptick there, but that's really meaningless when we look at the bigger picture. This is when we go out, we're zooming out here on this weekly. This trend, what do you think this trend is, bullish or bearish? What would you classify this trend as? Bullish or bearish? These are bond prices. What do you guys think? Bullish or bearish? I'll give you a minute to answer that question. Because this chart right here, if you want to know the future, this is where you're going to find it. Bearish, Milad says. Yes, bearish. Bond prices are generally bearish. We have not, we formed a higher low, right? Tried to take out that high, and we gave it right back, right? After the election and all that stuff, this thing turned right around. This is after the Fed cut rates. And so we have this little support over here. It means nothing. All you need is another red candle to get this thing going the wrong way. And what does this mean about the future? The price of money becomes more expensive. Rates are rising for whatever reason. I can't tell you why. I don't know why. I really don't care why. All that matters is that they are, right? If I look at the inverse chart, which is US 10Y. These are the bond yields. This is the interest rate itself, okay? This is a bullish chart because it's inverse of the bond prices, right? This does not look like it's going lower. In fact, it looks like it has a support over here in this area. It's been consolidating, right? Looks like we have a consolidation and that this thing generally wants to break out, okay? You see that? Yes, well, this is the bond yields, higher highs and higher lows, yield, which is the interest rate. So it's going to be opposite of the bond prices, right? So this chart right here looks like eventually it wants to take out these highs. That is not good generally for stocks. It's generally, it means stronger dollar is what that means. So stronger dollar means, you know, your currency in your other country goes lower relative to the dollar. It means gold goes lower. It means Bitcoin usually goes lower if Bitcoin is supposed to be similar to gold. But Bitcoin has its own things going on as well. But the point is, strong dollar means weak everything else. So keep that in mind with the stock market, right? Because this is a big factor right here. When we have low interest rates or zero interest rates, right, the stock market goes crazy. The small caps go crazy. Why? Because everyone has cheap money in their pockets and they spend that. That money finds its way into the markets. But when rates go higher, it's harder to borrow money. Companies don't expand as quickly or whatever. They're not, they let employees go. They're not hiring more people. They do less, you know, they buy less inventory. Everything shrinks when money becomes more expensive. People are always worried about losing their jobs because constantly, we're going to have some layoffs, blah, 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 right? And then everything shrinks. So that's an important part of the business cycle. Understand it. It's sideways right now, but this is a higher low consolidation. Higher low consolidation within a broader bullish trend, right? So all I'm saying is if rates continue to rise, all this talk of, you know, whatever, all this optimism, just all I'm saying is be careful because in order to get higher prices on, you know, things, rates need to be lower or lower rates will help that situation, will facilitate that situation nicely. If rates keep rising, then it's going to kind of put like a lid on it, right? It doesn't mean that the markets are just going to, you know, turn to garbage. It doesn't mean that because there's many other factors. The bond market is not the only factor in the market, but it's a heavy factor. So just keep that in mind. At that meeting that we were at in the city the other day, you know, they had these professional analysts. These weren't YouTubers, by the way. These were real industry analysts, and some of them even managed money, right? These were real people. They don't have YouTube channels. And they were talking about sector rotation, and they were talking about the whole AI thing. And they said one sector to keep an eye on is the software sector. The software sector is likely to see, you know, a shift of money coming into it as a result of the hardware. They said there's a cycle, you know, when you go from the hardware to the software. And since the hardware sector has been innovating, whatever, right? There's been a lot of innovation there for AI, blah, blah, blah. The software now is where an area to consider investing. This is what fund managers look at. So something to keep in mind, software. All right. Anyway, so in a situation like that, software may do better even with rates rising. It's going to depend on the company, of course. If the company borrows a lot of money, it's going to be a problem. But you understand what I'm saying. If that sector has more of a seasonal effect, like money has more, there's more reason for money to be attracted to that sector, that's a place to be looking for stocks, right? And each company may have its own situation, and some are going to be more sensitive to interest rates than others, right? How much money do they borrow? So anyway, just wanted to mention that real quick on the economic front. All right. So I've been talking a lot about this stuff, right? We're all clear on this, right? Let's move along now. I'm going to put Bitcoin back on the chart. All right. So I'm going to go to my Bitcoin perp chart here. Bitcoin perp. And this is the perpetual futures. Okay. I like to use MEXC. This is still the weekly chart, right? Now, we're going to change this to an hourly chart. And I'm going to refresh the chart here. We're going to make this bigger so we can see what's going on. Guys, let me know if you have any questions about that other stuff, right? If you have any questions about the Bitcoin risk or the bond chart that I just went over, let me know if you have any questions. Malad says here, except they were mostly bullish on that. I don't know if any involved. Well, they're the innovator. Malad, they're the ones that they're like the front. They're the hardware guys that basically, they're making the chips or whatever, and that's what the software has to catch up to. That was the way I understood it. Like they're the innovator. They've set this new tone for the AI, blah blah blah, the future, blah blah blah, and now software has to catch up and adapt to that. Right. So that's the way I took it. That's the way I understood that. So they're the leader. They are like the leader of that entire revolution. Is that company? So. So even if that company pulls back a bit or whatever, because nothing goes in a straight line, the result of their work should lead to the rotation, the sector rotation of money flowing into the software sector because of their innovations. That's the way I took it. So, which I thought was very interesting because I typically don't think on that front. I'm primarily a day trader, so I'm only concerned with momentum on things. So it's nice to hear those type of perspective, especially coming from those type of people, right? Again, non-YouTubers. So anyway, right. It was a profession. It was an industry meeting. And so Malad and Savi got some exposure to the type of stuff that I'm usually more exposed to, which is that side of things, right? I'm not sitting here watching, YouTube, whatever, right? You can find some decent things here and there, but it was refreshing to see just an industrial perspective on things. All right. Anyway, so what I want to talk about here is, oh yeah, he was great. He was great. Right, because they were talking about, real quick, just to let people in on what was going on. They were talking about the history of the CMT Association and how 20 years ago, whatever, the CMT got recognized by FINRA, so that the CMT is considered a professional analyst in the eyes of the securities regulators, right? Because there's something called the CFA, which is a Chartered Financial Analyst. I believe that's what it stands for. And they are the fundamental side. And they were the only ones that were recognized. So then these guys fought for the CMT Association. And now, because of that, CMTs are recognized as professional analysts compared to, what we have today. But in this space, in the YouTube world, no one cares. To be honest with you, no one cares. I've been a CMT for over 10 years. No one cares. So all people care about in this area is, I want to get rich tomorrow. Please tell me a secret or give me some kind of hope so I can be rich tomorrow. That is all people care about in this space, right? YouTube, TikTok, Instagram, Twitter, they're all, that's the, as someone pointed out, called them civilians, right? This is what the civilians are interested in. That's not my word. Someone else called them that. I thought that was a funny word to use. But that is all the civilians are interested in. I want to be rich tomorrow. Show me the secret. Do you know how many YouTube commercials I see now every day pushing some kind of software on me, or some other kind of, come to our community, we're going to teach you this, or a book that has 10 million tools you can use? And it's ridiculous. But that's, they're delivering the message that people want to hear. And that's what generates sales, something that I'm not good at. Anyway, so let's get into speaking of sales, great segue. Let's talk about the Trade Scanner Pro, shall we? So the Trade Scanner Pro, just for you, like, what is that? The Trade Scanner Pro is a software tool that Steen helped me develop. Steen isn't here today, but he helped me develop. And basically, we turned into code. We translated a strategy that I use for day trades and swing trades. And what the strategy basically does is it looks for pullbacks. And it quantifies the pullback and measures the pullback and identifies a confirmation of a pullback. So the way I like to describe it is, it's a trend following momentum reversal system. And we made it into code that we could put on TradingView, right? So it's called the Trade Scanner Pro. We also have a bot which sends out signals. It sends out emails all day long, right, for people that are paying for it. But the free version sends out one of those signals every day. It called Bitcoin long, actually. And Bitcoin's pulling back. It called Bitcoin long over here yesterday. I don't know what the exits were on that. And, but again, it's looking for changes in momentum. Now, how far the asset goes after that is anyone's guess. The Trade Scanner Pro is not a forecasting tool. It is a confirmation tool and a position management tool. So I'll explain to you how all that works. So first, here, let me just make this bigger here. All right, I just want to show you just in graphical form. I do this every week. First, it identifies a trend. Second, in that trend, it looks for a pullback, okay? Once it finds the pullback, it then measures the momentum of the next reversal, which is this. Once this is confirmed, it then sends out a signal in the form of trade suggestions, which look like these horizontal lines, right? This is what it looks like on your chart. Can I get a horizontal line over here? Right, okay. So you have the stop loss, which is this line usually, right? You have your entry price, which is this line. It's based on the close of the candle. And then we have the profit objective, which is that line. The profit objective is typically 1.5 to 1 times what your risk is. So if your risk happens to be $100 or 100 points, your profit objective will automatically be 150 points, right? You can change those numbers, but that's the normal setting that you have with it. So what makes the Trade Scanner Pro script more unique and more feature rich is that you can actually switch the mode to counter trend mode and catch this move right here, the counter trend move. So basically what it will do is it will ignore the trend and say, okay, I see a sell signal, momentum changing, it's against the trend, it ignores the trend, and it will call that. Now, there's a time and place for those type of signals, but typically those signals are extremely random and low probability. So I don't recommend counter trend unless you understand what you're looking for specifically. I'm going to do more trainings on that, but I've shown many examples on previous streams. Okay, but so if you're a beginner, you should use the Trade Scanner Pro in trend mode, and you should consider a 15-minute chart. Now, here's the next thing, and I'm working on this, right? I sent Steen some instructions. I'm working on this to try to simplify this process. But right now, like I just said, the Trade Scanner Pro is a confirmation tool, which means you need to come to the market with an idea. Now, for the beginner, this is hard, and I understand. I don't recommend trying to work with smaller time frames and things like that unless you understand how to come to the market with an idea. Now, each week I demonstrate that process. There's also a video that I put on YouTube called 5 Steps to Better Signals. In fact, I'm going to start linking that in the description. I don't have it linked, but I'm going to start linking that video. It's an hour-long video where I give you 5 specific steps on how to come up with an idea and then use the Trade Scanner Pro to confirm that idea, right? But right now, I'm going to show you how I do that. Now, before you even get to a chart, right? Before you even turn this thing on, you need to know if you want to be a day trader or a swing trader. That's very important. You must know one or the other. You can't just look at the chart and be like, and a signal pops up and you're like, oh, I'll just take that, because it could be random. And the idea is to avoid that, right? Because a lot of random signals appear. So actually, let me stop there with that. So you got to pick your time frame, right? Now, I'm going to turn the Trade Scanner Pro on this chart. I just turned it on, and I'm going to go to the settings panel. This is the first thing you need to do when you get the script. If you install the script on your TradingView chart, you have to go to the settings panel. If you notice, all these boxes are unchecked. There's a bunch of boxes here. You can customize this. There's a lot of colors and things you can change, right? But as a beginner, you don't need to change anything. That's for someone who's more advanced. What you want to do, though, is you want to turn these boxes on, right? Trailing stop, show previous trades, and heads up. This box over here is counter trend, and it changes the whole thing. So I wouldn't do counter trend right now. That's another story, right? So right now, we turned on those boxes. And if you notice, I got green columns all over the place. I got these little arrows all over the place. And I have these orange candles, right? So let me just explain what those are very quickly, because they're important visual cues. The green columns highlight these orange candles to let you know that there's an orange candle there. The orange candle is your heads up candle. So what that means is when an orange candle shows up, it means that within the next 3 to 5 candles, a signal is likely to appear. It doesn't mean that one will appear, but it's likely. So it gives you a heads up, right? Now, this is the hourly time frame. We haven't had a signal for quite some time. The most recent signal was this little green arrow here. These arrows, these green and red arrows that appear on your chart, those are previous trades. This was a suggestion by Savi, by the way. You can roll over the arrow and it tells you if that trade was a winning trade or a losing trade. In this case, this is a losing trade back here, okay? It tried to go somewhere and eventually it stopped out. I guess it never reached its profit objective. It's going to happen. But again, you don't want to take random trades, right? Random trades can also win, by the way. So it gives you some visual cues. One of the other things that I mentioned in the settings panel was the trailing stop. And I'm going to show you that in a moment when we put a trade on. So now, this is basically what it should look like when you have it on your screen, right? Now, like I said before, we're going to go to the split screen view here, and I'm going to I got my Trade Scanner Pro on my 15-minute chart, right? And right now here, there's nothing. I have no heads up. I have to turn on the, I don't have the things set up over here either. All right, so let's turn it all on. Okay, now it's on this chart as well. If you notice here on my 15-minute chart, I have green columns on this side, right? But they're red back here. That's because back here, the trend was bearish at the time, and it was looking for shorts. The trend changed on this time frame, turned bullish, right? That's why you get the green one. And now it's back to bearish. You say, well, what's the trend right now? If you look at this box up here, it tells you. Okay, if I make this chart bigger, it says trend is bearish, right? So every time frame is going to have its own trend, and it's defined up in that box. You could turn that box on and off, by the way, but usually you want to keep that on. So let's go back to the beginning, and how do we come up with the idea then? How should I trade? What should I do? Should I be looking for longs or should I be looking for shorts? Well, so here's how you answer that question. If you are going to day trade, which you decide way in advance before you even look at charts, if you're going to day trade, then you need to put 2 time frames, right? Whatever you decide to do, you need to look at 2 time frames. As a day trader, you want to have an hourly chart. You can do a 4-hour, but hourly is adequate. And then you want to have a smaller time frame. This is where your day trade or your action is going to take place. I'm showing you here a 15-minute chart, okay? You can use a 15-minute. I would recommend that as a beginner. You can use a 5-minute, you can use a 3-minute. The smaller the time frame, the more noise. But the idea here is you want a larger time frame like this one to gather context. It's where your trade idea is going to come from. And then your smaller time frame over here on this side is going to be the confirmation time frame. That's where the trade idea is going to appear. And those are the order suggestions that you're going to use. Sometimes you can have a trade on both time frames, but you want to stick to your action time frame. That's why you can turn this thing on and off, right? Like if there was a trade on this hourly right now and that was confusing to me, I just turn off the Trade Scanner Pro. Don't be confused by that. You stick to one time frame and the signal on that one time frame, right? So as a day trader now, I've made that decision. I want to be a day trader. Okay, I got my context time frame, my hourly, and I have my action time frame. Now I'm going to switch this to a 1-minute. And the reason why I'm doing that is because I want to demonstrate the Trade Scanner Pro. I want you to see trades, how they unfold in real time. If I have to wait on a 15-minute chart, it'll take forever. It may take hours before a trade signal appears. And you say, well, do I have to sit in front of a computer for hours? No, you don't. You simply you can basically use this function here on TradingView where you can set up a notification and you can basically tell it whenever something appears like a heads up or a signal, it'll send you a notification by email. It could be a pop-up on your TradingView app, however you want to receive that notification. Now, The free version of TradingView allows you to set up one notification, just one. If you have a premium version of TradingView, you can set up multiple notifications. So that's where having the premium version can be more beneficial. But to start out, you can use the free version and you can set up one. All right, now, so I have to decide what am I looking for here, right? So here's how I do that. I'm looking to evaluate just two components, trend and levels, support and resistance levels. Based on those two pieces of information, I can come up with a trade idea that I can use the Trade Scanner Pro to confirm for me, right? So let's see, what can we figure out here? Let's make this hourly chart bigger because I want to figure out what I should be doing. So I know that the general trend here, even though this trend is bearish on the hourly, I don't want to rely on that by itself. I want to look around a bit and see what's going on generally. I see higher lows and higher highs all over the place, right? This trend is not exactly bearish. We have a bearish momentum situation right here, but let me show you something. If we go to a 4-hour chart, the trend is bullish. See that? It says trend is bullish. Now, I knew that because you're looking at the general structure, right? Don't rely on this by itself. It's not a good idea. Look at the general structure. So let's go back to our hourly, right? General structure. I think it's pretty straightforward that this is a bullish trend. Does anyone think that this is a bearish trend? I'd like to know how, but let's see. So we have higher lows, higher highs over here. I have a resistance broken. Resistance, new support over here. All right, I have a resistance over here, okay, which was taken out. I have higher lows up here, higher highs up until this point, okay? So what I just drew there were some support and resistance levels based on previous price reactions. It's very visual. It's very easy to see. There's no magic here. There's nothing special. There's no secret here. Old support becomes new resistance and vice versa. Notice we had an old resistance. We retested that resistance. I got some warnings in the area. I got a green candle. I should probably be looking for longs. Does that make sense? Right? So I should probably be buying at a support in a generally bullish trend. You may be confused by this, but we can agree that the trend is generally bullish, right? We just happen to push a lower low and the momentum is changing. So that's why you can run into these conflicts. Trend is bullish. And if you're not sure, just go to one time frame larger and you'll get your answer. 4 hours says bullish, right? Now, so I should be, right off the bat, it took me here a minute to figure out that I should be going long. Oh, made a wrong line there. I should be looking for longs here. Where would that change? Well, if we were up here somewhere, that's the midpoint area, highly random. I could look for longs or shorts. If my momentum is generally bullish, I would probably just go with the momentum because the broader trend is momentum. The broader trend is generally bullish, and I want to try to align with that momentum. If we were up here somewhere, I would probably be open to shorts and use the Trade Scanner Pro for shorts, right? Understand that? So on my hourly, it helped me determine what side I should be looking for trades on. I'm going to be looking for longs. So let's close this up here and let's take a look at my smaller time frame, because the idea of the smaller time frame is to align with the bigger picture chart. That's what I'm trying to do. Notice. So let's open up this chart here. Notice, right, on my 1 minute, the trend is bearish. I just finished giving you a conversation about bullish. Notice this price action, right? Just notice this line was from my hourly chart, right? It's the support area. Notice there is some type of price action going on here. There is some type of buying activity. So how do I get bullish trades here? How do I find bullish? How do I get the Trade Scanner Pro to show me bullish trades? Who wants to tell me that? How do I do it? Because right now, oh, I got a signal. Look, I got a bearish signal. Right? Because my trend is bearish. It's looking for bearish signals. See that? But I'm not interested in bearish signals. I'm not going to take that. I'm not interested. I want bullish signals. How do I do that? Also, you can say, if you're new and you're like, I don't know, how do you do it? Please say, I don't know. so I can explain it to you. How do I look for longs here? I want longs. Right now, the trade scanner is set up to give me shorts. And I understand this may be confusing for people, and I'm working on a way to make this process easier. But right now, this is the way it is. You have to come to the market with an idea. And sometimes coming up with that idea can be tricky. You can apply this to any market, by the way. But you want to apply this to markets that have volume, markets that move. You know, if you're picking some altcoin that has like no volume, you're wasting your time. This is a momentum tool. You need momentum. Momentum usually requires volume, something that has volume. So I don't see anyone answering. How do I look for longs here? This thing's giving me shorts. I'm not interested in shorts. No answer? I'm going to have to answer for you. I'll give you a couple more seconds. Anyone? Anyone still listening? I guess not. Okay, so this is a great example of where I go into counter trend mode. Smaller time frame. Well, Malad, no. This is what I have to change. I am on the smaller time frame, but I want to go long. My Trade Scanner Pro is telling me to go short because the trend on this time frame is bearish. But I'm trying to align with the bigger picture. In order to do that, I need to change the way this thing looks at the trend. Remember before I talked about counter trend mode? Right? So you go back to your settings panel and you switch counter trend. Now the trade scanner is looking for longs. Okay? Notice these columns turned green, right? I'm looking for pullbacks on the long side. So it's either I change to counter trend mode. Now let me know if you find that confusing and you don't understand what just took place here. I switched to counter trend mode. Please, I want you to understand this because it's a very important concept. I'm interested in longs. So I either switch the mode or I have to wait until the momentum on my 1 minute becomes bullish and then gives me long signals, right? Which can take an hour. So I can do that. Or if I'm looking for a trade now, I can switch to counter trend mode because I'm in a bearish momentum situation on my 1 minute, but I'm at a broader support level. So at a broader support level, I'm interested in longs. Am I not? Oh, this trade would have worked out nice, but I'm not interested. I'm still not interested in shorts. I'm interested in longs. Look, there was a long over here. That long was worth 304 points. Okay. So we know that there's a general look at all these longs off the support. Is long a bad idea here? I don't think so. There's been plenty of look at all these longs. Some of these might be losing trades back here. Let's see. Yeah, okay. Minus 228, minus 240. How about this one? Minus 281. So there were some losing trades back here. This one, how is this one a losing trade? I guess it never went to the profit objective. How is this one a losing trade? That one doesn't make sense to me. How about this one? Profit, 417, right? This is a losing trade? Okay. Then this one called a short, right? Look what's happening here. Called a long over here, right? This long was how much? How much was that long? 304. All right. Now, keep in mind, these trades are based on reaching the profit objective. They're not based on the trailing stop. The trailing stop changes the whole thing, right? The trailing stop is what allows you to capture something like this and stay in a larger portion of the move, right? So I got no signal there, right? I'm on my 1 minute. I'm looking for longs. This looks like a nice long situation. What do I have to do? I'm going to have to go to a smaller time frame. Let's see. There, look, there's a signal. Oh, this is a short signal that's still in play. Interesting. I'm in counter trend mode. Yep, I'm in counter trend mode. That short signal should not, I guess that short signal is still open from before. It needs to close. Let me go to a 15-second chart. Anything here? All right, there was a long. Look, that long was called very quickly on my 15-second chart. It's almost at the profit objective. I'm not going to buy it now. But you can see this was my idea. Okay, now let's see if I have my, if you notice, right, on this, I have my trailing stop is on, right? I have it clicked it's checked. The box is checked, right? If you notice over here, the trailing stop has now appeared. This orange line here, see that? The trailing stop just moved. So what the trailing stop essentially does is it reduces your risk as the trade unfolds. If I had entered here, I missed the entry, but maybe we'll get another one and I'll take it. If I entered there, okay, right now, my risk went from this entire amount, which is 94 points. My risk went from that to this, 44 points, right? And it keeps, look how quickly it's moving, right? Eventually, my trailing stop will be at break even, which will give me a risk-free trade. And if this trade continues to go through the profit objective, which it's trying to do right now, the trailing stop will keep me in the trade. Now, keep in mind, this is a 15-second chart. Look at that. I don't recommend doing this on 15-second charts, but I want you to see the script in action. Look at that. That's a beautiful move. I should have been checking the 15-second chart. But the 15-second chart, by the way, is only available on the most expensive version of TradingView. So if you don't have that, you're not going to even check. You're not going to be able to see below 1 minute anyway. But as a beginner, I would not suggest that. These are very, very noisy charts. They look great when you see the action, but they also can generate a lot of losing trades. A lot of random stuff going on here. So notice I came to the market with an idea. Remember that short earlier looked pretty good, right? But there's a long going on here. So what makes this, I'm confirming momentum changes in a general support area because there's obviously buying activity in this area. So the script can't tell you all of that. If you just understand that you're at a support in something that's generally strong, but your small time frame is negative, it's bearish, you want to switch it so that you're looking for longs and align with the larger time frame. That's where counter trend mode comes in. Okay, look, that one got tapped out. See that? So it went to its profit objective and then turned around and went to the trailing stop. That's why it pays to take something off at the profit objective. Now, this trade was reported as a profit of 28 points. All right, 28 points. But again, this is a 15-second chart. What do you expect, right? So we got the pullback. I'm waiting. Now, I'm still in counter trend mode. In fact, it says it right up here, right? It says counter trend mode active. It says it in this box. That's how I know it's still on. And I don't forget. We're back in the support area. Great. I'm looking for a new signal to confirm. This time I'm going to take it. All right. I open up my trade ladder here, my order ladder. Now let's see if I get a signal. Now, I had a heads up over here, right? But that's a bearish one because again, it's in counter trend mode. So I don't have any heads up here right now. Maybe I'll get a signal though in the next few bars. Let's see. Right, just have to be patient with it. The reason why I have to show this on such small time frames is because imagine we'd be waiting like hours here for these trades to develop if I was working on a 30-minute, a 15-minute, you know, that kind of thing. But for your experience, it's best to do that and just get the notifications from TradingView. So you could just set your notification, go do something else, and eventually it pops up after a couple of hours, and then you can put on the trade. But you were prepared for the trade anyway because you got the heads up or something like that, right? And you're like, oh, I got the heads up. Okay. And then you know that the signal pops up in the next couple of hours. You were prepared for it, right? And you go on your phone and you place the order. You have, of course, you have to manage the stop and everything manually. But, you know, what are you going to do? All right. So I got no signal there. Let's jump around here and let's see if there are signals anywhere else. That's a 30-second. This 30-second short is still in play. Look at that. This is a short. All right. Don't be confused by that. Right? If you're looking for longs and you've made that decision, I'm looking for longs, you don't take these shorts, even though there's a valid short here right now. Let's look at the 1 minute. Anything here? No. Do you always at market? That's a good question, Milad. It depends on the situation. A lot of times, if I'm manually getting out, then I'll bang it out at market. If I'm trying to get into a trade and it's noisy, especially in the futures, I'll use limit orders. I use limit orders to get in, just to get a slightly better price. But if like sometimes the market's just moving too fast and you're never going to get it. So I'll use a market order, but I try to be very conservative as far as how often I use market orders, because a lot of times you get bad prices. That's a good question. Okay, so look, we're just jumbling around right now, right? Just noise. Okay. Notice there was no signal here. Cool. So I'm not caught in that. It's important to also understand your time of day. As a day trader, this time of day is generally a bad time to be in anything. Stock market's closed. Bitcoin is just going to be jumbling around usually. A good time of day, Milad, you asked me this question at the event. A good time of day for something like this is like the market open, 9:30 Eastern time, or somewhere maybe around going into lunchtime. That's about it. Or maybe the close of the day, you may see some action, like 2 p.m. to 4 p.m. You may see some action because the stock market is giving action. So that action can basically find its way into here as well. But after the stock market close, this thing typically gets very random. So it's important to understand that for this demonstration. Also, other good times, London Open, right? The European Open, great time, a lot of action across many markets around that time. Asian sessions sometimes, 8 p.m. to 10 p.m., something like that. There's usually some decent action. And I'm talking on smaller time frames. Look, I got my warning. Next candle or two should be a signal. I'm going to buy. There it is. I'm buying it. Okay, so I just got long 2 contracts. Okay. Not exactly at the blue line, but it was, it's never going to be precise. I had to use a market order there because for demonstration purposes, I'm not going to mess around with limit orders on here. Now, let's see if the momentum follows through. Keep in mind, this is a 15-second chart. Movements look very dramatic, and there's a lot of noise. So let's see if this thing can at least reach its profit objective. Okay, I'll be happy if it can get there. Now, as the trade unfolds, if this thing could stay in my favor for a few bars, you will see the trailing stop appear and start to follow the trade. So the trailing stop gives you that visual cue. I used to get that question all the time. Where do I put the trailing stop? How do I trail the stop? Well, the Trade Scanner Pro answers that question. It puts it there for you. So you know where you should be trailing your stop. And it embraces the random nature of the market rather than putting you up against the random nature. Because we don't know. I don't know if Bitcoin is going to do something stupid right now. It might. Bitcoin may rally 500 points right now for absolutely no reason, right? I don't know if it will, but the trailing stop will keep me in for a much longer time than I normally would stay in, right? Oh, look, we went to the profit objective. Nice. Okay. I'm going to get out of 1. As I said, sticking to my plan. Got out of 1. And now I'm going to let the other one ride. And let's see if the trailing stop let's see how much more I can get out of this based on the random nature of the market. Okay? Because again, this is all just random price action at this point. But what I'm betting on, what I believe is non-random, is this blue line that I drew earlier. It's a support level. Notice we keep getting some kind of buying here. Something is going on here. I don't know what, but something. So that is what I'm betting on. And I was able to determine that from the hourly chart. And now I'm trying to catch, some sort of move based on that. But I mean, it looks like there's not much follow through. Like it's trying, but it's not, it's not following through. Okay, whatever. But the point is, the lower risk thing to do in this area is buy, right? Even though it looks bad right now, rather than short. Because if I'm shorting near a low, if we go back to the hourly, right? Look at the hourly. If I'm shorting this on the hourly is like your roadmap. If I'm shorting this, not exactly the most attractive area for shorts, right? If anything, people are probably looking to buy that low. It doesn't mean that the low is going to hold, but probability usually favors a situation where, here, I'm going to draw this for you here. Let me get my rectangle. Probability usually favors something like that. Basically a failed low, right, on the hourly. which can drive this thing a couple 100 points, right? On the long side. So you need to be able to anticipate that, right? And that's what I'm trying to confirm here. And I'm using a 15-second chart, which is, like I said, not a time frame I would recommend. But this is the scenario I'm looking for. And I'm looking to confirm it on this time frame by being in counter trend mode, because this time frame is still calling for shorts, because the momentum on the small time frame, this little red candle on the hourly, that little red candle is bearish. Right? So basically, that's what this trend is bearish. That's what that's telling you, that the minute to minute or second to second momentum is bearish. But I'm bearish into a very heavy duty area where people are looking to go long. So you have to go with the bigger picture. The bigger picture is what carries all the weight, right? So this is what I'm anticipating. That's the trade idea. And I'm trying to confirm it here. And I got some confirmations. They're not going very far. Not the best time of day, but as you can see, it's trying. I was able to get out of one contract at the profit objective. Okay, nice. I'm trying to give this one a chance, right? The trailing stop hasn't appeared yet because this thing is not going in my favor enough. So right now, my risk is still the max risk, which is this stop out, right here, which is what? 90 points? 90 points. Now keep in mind, I locked in one contract at 1.5 to 1, which is what? About, was it 132 points? So if I lose on this trade, on this contract, and I lose my 90 points, I'm still going to be up like 20 or 30 points or whatever, because I locked in one for a profit at the profit objective. That's why you have a profit objective. You take money off the table there. It's usually a good idea. Unless it like blew through, you know, like if I had a situation where it just went berserk like this, then I try to hold on longer, right? And then as soon as this starts to hesitate, I get out of one at that point. But, you know, like I said, slow time of day, I'm very happy to take at the profit objective. Over time, you get used to it. You learn the behavior of your instrument, and you know when to kind of give it a chance or not, just from experience. But this tool is made for people that are confused. You're not sure when to do this, when to do that, and it takes a lot of the decision making off your table for you. Okay, look at this price action. This is lousy price action. If I was going to depend on the candles alone, I probably would have gotten out of the whole thing by now. But I'm not using the candles to guide my decisions. I'm using the order suggestions, right? And it helps me not get shaken out of this noise. Man, this thing is not doing that good. But again, it's a 15-second chart. Hey, Sean. Cool. Hey, lad. Good to see you guys. No problem. Yeah, I'll be wrapping it up here momentarily. I'm just trying to ride out this trade. I took 2 contracts. By the way, this is on paper, in case people are wondering. Is this real? No, it's not real. I'm doing this on paper because I'm not going to trade real money at this time. So I'm just waiting for this thing to either go to the stop or to show me something better here, right? But like I said, I locked in one. So I'm not making judgments on the price action anymore because I'm in my trade idea, right? Now, this thing tried to give me a warning there. It vanished. Okay, no problem. Looks like we're going to go to the stop. I'll bang it out. I'll respect it. Now, keep in mind, sometimes you'll have these situations where it stops out, right? I'm getting a warning for another long signal. Notice? So I'll get back in. If I got stopped out and I got another signal, I would get back in because it's still the general area. The premise still holds. It's just a lot of noise right now. Okay. So again, that comes with experience. Hey, Steen, how are you? You made it. Were you confused because I put the wrong time in the schedule? Because I sent the thing out. I scheduled this thing for the wrong time. I put it 2 hours after I normally do it. Steen, is that why? Were you confused by that? Oh, okay, no problem, no problem. I know Steen's busy, probably with the holidays and stuff like right around the corner. I can imagine. But I'm glad you can make it though. See, Steen is busy and he still makes the time to get here. Cool, nice to see you. So I locked in one for at the profit objective, and I'm trying to ride this one out. No, I mean, look how noisy this nonsense is. But I'm not banging it out because it hasn't gone to the stop. So again, it clears up the decision making. Now, if you're considered now, while we're waiting for this thing to do something, and a lot of times when I see this, it goes back to the entry price. I'm going to erase this blue line because it's confusing. That's the entry price right there. I'm going to buy it back. I bought my second one again. I bought it back because we're back at the entry price. Right? It's an aggressive thing to do because now if I get stopped out, I'm giving back my whole trade. But we tried to go lower. We failed a couple of times. Back to the entry price, like a third time. Right here's the first entry was here. There was a second time over here, which I ignored, and now we have this. So why not? Okay, let's give it a try. If we go back to the profit objective, I'll bang it out again. Right, and that would be 2 that I locked in at the profit objective if it can get there. And then maybe the third one runs. Notice my trailing stop isn't active yet because this thing is not, it's not being in my favor long enough. Notice? Okay, so if you're wondering where to sign up for this thing, I'll put the link. The link is in the description. I'll also put it here in the chat. Okay, so I'm just going to type it in real quick. All right, that's where you can go to this link right here, TSCPRO. That's correct. Go to that link, all right, and I'll take you to this page right here. This is the Trade Scanner Pro page. It explains to you how it works, tells you a little bit about me, and this is where you could sign up for it. 14 days for free. If you wait till after 14 days, you will get billed. You can cancel anytime before then. You press this button. Now, please listen carefully what I'm about to say. I'm just going to do this very quickly. It takes you to the sign up page. Make sure you put in your TradingView username right here. Make sure you put it in there correctly. If you forget that step, you will not get your invite. Now, you can sign up basically for 1 year for $270, right? You're saving a little money there, or you can do $30 a month. Those are the two prices. Those prices are going to change very soon once we have, oh, look at that. Once we have our overlays done, which Stian is working on. All right, I'm going to blow one out here. It's not exactly at the objective, but you know what? It's green. Now it's back in the middle. All right, I'll give it a chance. Notice I'm getting a red column here because the trend has changed to bullish, and I'm in counter trend mode. So please don't get confused by that. That's why I say counter trend mode is really for more advanced traders. And I am trying to improve upon the process so that it's just easier all around. But you're just going to have to deal with that right now, right? Like understand the mode you're in and if you're in counter trend mode or not. It's always going to give you the opposite of what this is. That's the whole idea. All right, I went back to my entry price. All right, I wasn't quick enough to get out of that. Wow, I was too busy trying to do a sales pitch. Anyway, so we'll wait. But you come to this, it's $270 a year, or basically $22.50 a month at the 270 rate. Okay, and what I would suggest if you go for that is give yourself some time, work on the 15-minute chart, and really focus on coming up with the trade idea. Do not think that this tool is a forecasting tool. I see a lot of people make this mistake. They sign up and they think it's a forecasting tool. So they take every signal. Don't do that because many signals are going to be random and you're going to be like, oh, this thing sucks. Right, because you're not using it correctly. You have to come up with an idea. Okay, like I came up with the long idea here. It's trying, but it's just not doing a great job. It's just jumbling around. All right, and it may go to the stop this time. I don't know. My trailing stop appeared. But the whole idea is you come up with an idea and you use this to confirm. Use a 15-minute chart, not a 5-minute or 3-minute or 1 minute. In the beginning, use a 15-minute chart. If you want a day trade, use a 4-hour chart to come up with your idea, right? Come up with your idea. Oh, okay, I'm looking for longs or I'm looking for shorts. Those are the only two choices. I'm looking for longs, I'm looking for shorts. Once you come up with that idea, then you're in counter trend mode or trend mode. I can tell you right now, just a quick summary. Counter trend mode usually occurs at support or resistance levels. Like here, we're at a support level. I'm in counter trend mode because we're at a support level and I'm looking for longs in an area where my momentum is still bearish. It's a support level. I'm looking for longs. I'm trying to align with the bigger picture support, which is right here. I'm in counter trend mode. Now, if I was up in the midpoint area up here, like I was saying before, and I was getting longs, then I probably would not go in counter trend mode. I would just stay in trend mode, looking for the momentum to continue. Although it's very random in the middle, that's where momentum can continue, especially if the general trend is bullish. Okay, which in this case, we know Bitcoin, the general trend is bullish. Oh, I'm going to get topped out this time. Okay, so let me get out. It touched the trailing stop. And you got to respect those. You got to respect those orders, by the way. I may get another signal, and if I do, I'll get back in. But what I'm trying to say is, based on your roadmap, based on your location, that's going to tell you whether you should be in trend mode or counter trend mode. I recommend you try to work in trend mode as much as possible, because your probabilities are better when you're on the side of the trend. Okay, and that would be the general trend is bullish. And if you start working your way up into here and you start moving up and you're moving up and you're getting continuation patterns on your 15-minute, beautiful. Another signal is going to appear here. I'm going to buy 3. There it is. I'm going to buy it. Okay. I don't know if it's going to work. This could be one of those noisy situations where it pops up, pulls back, pops up, pulls back. Happens all the time on these 15 seconds. Again, this is a 15-second chart. That's why I don't like these charts. Let's see, is the bigger picture doing anything good here? Let's see. When I say bigger picture, I'm talking about a 1 minute. Look at this. A 1 minute was called way back here. And looks like it's going to the stop on the 1 minute. That's not good. All right, and I'm long. Oh, yeah, it's going to the stop. I better get out. Okay, bang it out time. But you see what's happening here, right? I think I banged it out right at the bottom. But there was a 1 minute signal there. Let's go to the 30-second. Anything here? No, but there's a signal that's in process of developing because I got the warning. So next few candles, a signal may appear here. My 15-second got banged out. All right, that was this trade here. I took this trade. That got banged out. That's going to happen on these time frames. Okay, but so you understand where I was going with this before. I'm looking for longs because we're at the support level, okay, which we determined earlier. It's basically a support level. Look where it's old resistance, new support. It's just very noisy around here. Okay, if we clear the support, then sure, I'll look for shorts if we clear the support, but we haven't cleared it yet. We're just flirting with it right now. If we worked our way into this area, you can look for continuation patterns all the way up until you reach up here, if it can reach up there. Since Bitcoin is generally bullish, it might just do that. Again, we're working on the day trade time frame. So I am not making forecasts here. I'm just trying to trade the momentum. And I'm looking for support and resistance levels as my profit objectives. Does that make sense? So I know it might be confusing. We'll try another one of these. That signal is going to appear. There it is. Okay. Hopefully it goes my way this time. Maybe not. That's why I like to wait like a second or two to see if the next candle just turns red automatically, because it's a 15-second chart. Oh, man. That thing went vertical. Fast. All right, I'm going to just take one off. If I can get the next green, just one more, like, all right, I guess not. Man. 15-second charts are just, like I said, not a good idea generally. But that's the idea. And it may, like I said, if it's confusing to you, you need to work with it for a little bit. But if you're using this to confirm, maybe you have another system you use and you need confirmation, you can use something like this for confirmation. But basically, that's what this thing is, right? It's a confirming tool. It's looking for pullbacks on the side of the trend. And you want to know if you're at a support or a resistance, or if you're in the middle of a trend. That's the best way to think of it. Man, this thing's just all over the place. Should have taken it when I had that 2 seconds. I had 2 seconds to take that profit up here. That's what happens when you hesitate. Now I have to bang the whole thing out. Now we're right at the level though. Hold on. Before I quick to bang that out, let me just see what happens at the level, because we're right there. And this is what happens sometimes. See what I mean? Now, if this thing hesitates here for the next minute, right at the level, you're going to see another signal. So instead of me just banging it out, I'm just going to try to hold on. If it can maintain this level, look at that. It's amazing. Let me open this up here a bit. Look where we are. Right at the hourly low. We're right on it. So notice we're not getting this scenario yet, but it's just noising around. Notice I'm not changing my view. There's another signal. Right? I'm in it, so I'm not going to add to this. Right? No reason to add. But if I had banged it out, then this may be another place to get back in. But notice I keep taking signals and they keep stopping out. Right? That one stopped out. This one stopped out. So that's why you want to take a more reliable time frame. If you're going to use a 15, see what I mean? If you're going to take a 15-second chart, you should be doing it at a time when there's more volume, right? Not at 4:30 in the afternoon. Look, this is going to turn into another signal here. Okay, so you have to understand the market that you're dealing with. I'm going to give it a chance because there it is, another signal. If one thing to notice, if signals keep appearing in a common area, a lot of times you can even use that as an idea. Like, we keep getting signals in the same area. Something's happening there. So that's why I'm not going to be quick to change my position and be like, okay, it's a short. I'm not going to be quick to do that. We got to clear the area, right? And we haven't cleared it yet. It looks ugly on a 15-second chart, but we haven't cleared it yet. We keep generating signals and we keep stopping out. See that? So I'm not reacting to them. I'm going to bang out the whole thing that I took earlier. I'm going to have to bang it out here, but let's see if we just trying to give it a little bit more of a chance. There's another warning right there. Let me take a look at something like is it 30-second telling me anything here? No. Nothing there. How about the 1 minute? Anything there? No, nothing there either. Oh, I'm getting warnings. But we're kind of broken there. Let's see. Let me open this up a bit here. Yeah, we're kind of broken. That's broken. Right. So when I see something like that, all right, doesn't mean I'm going to switch. It just means I'm just going to get out. I tried to give it a chance. Let me put all three. I have 3 of them on. This is the 1 minute. If I get the orange candle, how much time do I have in this candle? All right, I got 30 seconds. All right, might as well wait. And sometimes this is the game you have to play. It can be a hard game, right? But by sticking to your general level, here's another thing I like to do in a situation like this. Let me get out of counter trend mode. And were there any bearish signals? Let's see, like what was this on the bear side? I'm just curious. Would it have been better? Anything here? Well, we had this up here. Anything? Let's see, what was the 15-second better? Let's see. No, only that one signal. So it's not like it was calling all kinds of bear signals there. I just like to check that. It's not going to help. It's not going to affect my trade decisions. Okay, so I went back into counter trend mode here, and this thing is trying again, but I'm not going to keep putting on more and more and more. I'm just, whenever I see a new, if I happen to be in it and I keep seeing new signals, I just try to give it a chance. It's almost like the market is putting the brakes on every time it makes that lower low, and then it generates a new signal. Basically, it's not really going lower. It's just noise. It may be very hard to see that because we can't see what's in front of us. All we see are red candles and red candles, right? But there could be buying going on here. We just can't see it, right? So that's the tough part of this game. That's why we have a stop loss, that we either respect that, or if you don't, you can run into some serious problems. Now you say, well, you're still in it because the level. I know the level, and I'm trying to give that level a chance. I'm going to bang this thing out, but let this trade finish and I'll get out. So that's what you're going to deal with this thing, right? I'm not going to be one of these guys that shows you this tool and be like, oh, look, every trade's a winner, or a cherry pick, which is even worse. I like to show you on real market data. Yes, I use these ridiculously small time frames because I want you to see the script in action. Now, if you were working on a 15-minute chart, you're not going to see this. You're not going to see like a trade and a trade again and the trade again and the stop out again. Like, you're not going to see it so quickly because, I mean, look, every minute this thing is basically giving another signal. On a 15-minute chart, it's going to be like, you may see one signal every couple of hours, right? So you're not going to see all of this confusion and all of this price action on a 15-minute. That's why I recommend the 15-minute. Yes, the stop is going to be wider, but you take a smaller position. And when it goes your way, it's nice, okay? And you capture a nice profit objective. Where here, it's like it goes your way for 2 seconds, and then it turns right around and stops you out like constantly. So not a good idea, the 15-second chart. Although I've shown some pretty interesting trades at times when it happens to work out, but a lot of times you're dealing with this. Okay, so let's see. Again, we're just playing with a lot of noise here. How much time? Okay, I'll be wrapping this up here momentarily. Any questions? Any questions about this? So if you want to sign up for the Trade Scanner Pro, again, you have a 14-day trial to use it, test it out, see if the confirmations work for you. It's nice when you have the orders placed in front of you. I'll go to a 15-minute just to see what it looks like. Look at this. The 15-minute had a long from here. Look at that. And it's stopping out. Looks ugly. Look at that. So that 15-minute wasn't good. Was that even worth taking? Yeah, that was kind of worth taking. Yeah, look. It occurred on this candle over here, basically. Yeah, that would be a stop out on the 15-minute chart. Okay? Look at this short though. Is that worth, how much is that? That was an 851 point profit based on the profit objective. All right. Again, that would have been counter trend. Is this thing out? Back on my feet. I think this thing's out. On my 15-second chart. Let's see. Oh, this must have been the trade over here. All right. I'm going to have to bang this thing out. I tried. Doesn't want to reverse. I know that the moment I bang it out, it's going to reverse. And I keep getting those warnings. But, all right, goodbye. It just keeps going. So keep in mind, look at these trades. Look, 1, 2, 3, 4, 5 trades in a row. All of these stopped out. All of them. Okay, see that? And you're like, oh, that sucks. Right. This one kind of, remember earlier, I took that one, worked out, right? So this support broke, and now this thing's not turning around. Let's take a look at the hourly. Look at this. Took out those hourly lows, notice? Blew through them. So in a situation like that, if this candle closes red, what time is it? There's about 15 minutes before this candle closes. No longs. Right, just called another long there on the 15-second. No longs. This is where now now you go back into trend mode and wait for sell signals. Now you don't just jump in. You just take this off counter trend mode and be like, all right, we broke the support. Now I can look for momentum continuations. But what's going on here as far as the levels go? There are more levels here. There are more levels here. So this thing still may turn bullish. But right now, there's nothing on this chart that's really supporting that idea, right? You just have a red candle. You have to let this candle close before making any judgments. This candle can close as a pin bar back through that support, right? So I would still be very careful on the short side. using something like this, especially if you're working like on a 15-minute, right? Excuse me, here's a 15-minute. I would still be in counter trend mode here on the 15-minute because this thing can easily turn around, right? We're touching support levels. See what I mean? So I hope I gave you some insight as to how to use this. Again, it's tough market action, but that's what's going to happen. And you may say, well, what good is the tool then? When you catch a level nicely, you'll see, because the winners are usually a lot bigger than the losing trades because of the trailing stop. I just couldn't really show you that today because the market's just not cooperating. But you got to look at those levels and you got to look at the broader trend. Don't make the mistake of looking at this and saying, okay, that's the trend. That's the trend on a small time frame. That's not the trend, though. The trend is when you zoom out, right? This is the trend. It's generally bullish, generally. So if you're going to use this sample here as the trend, if you're going to use that as the trend, then that means you're going to have to work on a very, very small time frame, right? And you can only decide that pretty much after the supports have been broken. After the fact, it looks easy. Like, oh yeah, I would have shorted it here and here and here and here. After the fact, right? The thing is, this thing keeps touching supports, and it's more likely to be a long, at least on the small time frame. Okay, I don't know what you're saying there. On post chain, okay, maybe he's spamming a coin or something. I don't know, man. I don't know what that is. Don't spam my stream. Yeah, I'm gonna ban that guy. Okay, anyway, so any questions? Let's take a look at some other time frames. Let's look at the 5-minute. See how it's turning around again? 3-minute, pin bar, 2-minute, 1-minute. Let me just put this back on to see if there's anything. Oh, look at this. There's the 1-minute long. It shows up now. All right, let's just see how long was it between one and the other. Here's one. 25 minutes. It took from this long to the new one, right? To this current long. And look, I mean, again, it's still like jumbling around there. But that's how long you would have to wait. Okay. Or you set up your notifications. And again, when you get a situation like this where it starts out green and then it turns red right away, just hold back a minute, right? No reason to rush into this thing. If the next candle after this turns green, and apply this to your 15-minute, gives you a signal, turns red right away. All right, hold off. Next candle does something like this and it's green. Okay, then maybe that's the time to enter, not this. You can also use price structure as sort of a guide too. Notice we have these lower highs, right? Lower lows. I don't have a higher low anywhere in here yet, right? So if this candle happens to turn into the higher low, then that would really be a strong confirmation for this 1-minute long. All right. So anyway, see what I mean? The higher low. If that closes that way, it may not close that way. But this general area is still vulnerable for shorts and still more probable for longs, in my opinion, because it's pulled back so much. And again, you're only looking for this type of profit objective. You're not looking for this thing to go back to 100K. That's what we're playing with here. All right, so I don't see any other questions. Steen, how do you like my background? I'm going to be improving on the background. I know it's kind of like nothing back there, but it's better than the blue screen, don't you think? How many people like this background better than the blue screen? Anyone? I know I've been talking for a while. I'm going to wrap this thing up now. I talk too much. Any feedback on the background? I know it's like a pretty boring background, but I used to have. I could put the screen back up there. Back if you want the screen back, I could put it there. But is there any window? Well, there's windows in front of me. And then there's that door behind me. If I open that door, there's windows, but I don't want to put all that. That's kind of like, you know, I don't know. It would look weird if you could see if I open that door behind me. But I'm not in a windowless room. There's windows right in front of me here. I just have to, I have to put some more interesting things in the background. Either that or the blue screen. But I like this better than the blue screen. It looks like I'm in an actual room. Like it's real. This is a real room. It's not one of those fake backgrounds. A lot of people use those fake backgrounds. Look at the high or low develop here. Nice. Looks good. Okay, cool. So you like, I'm glad I got some feedback, right? You like this, you like this room. See, like I can walk around here. So it's bigger. Cool. All right, you guys. So I don't see any other questions or anything. Thank you for the feedback, Malad. I'm going to take this. So if you want to try out the Trade Scanner Pro, you know where to find it. I plan to make some training materials for this thing, some training videos for free for my free people, and also some trainings for the people that are actually subscribers. It's going to be, of course, there'll be more substance to that training. I'm still working on that. That's going to take me a little while, but I have the plans. Okay, so I got to start somewhere. Anyway, so I hope to see you sign up for the Trade Scanner. And if you have any questions, you know where to find me. You can send me messages on TradingView. Also, I just want to mention real quick, or you can send me an email to mark@marketmarkets.com. If you need help, you can join the Discord community. There's a support channel in there. Like I said earlier, Stian is usually there paying attention. Alex is also in there. You can ask questions and stuff like that if you need some help. And if you by chance get a message from me or from Stian or Alex asking you for money, it's a fraud. Usually those are impersonators. Please block the person, report that person, and let us know that someone is impersonating me, because I don't like when my people get scammed. Right? This is a common practice. They do this all the time because they like to take advantage of my good reputation. So please, if you get a message from me initiating the message, it's a fake. I don't do that, and I don't ask for money on any platform. I don't ask for money. I don't do that. Look at this going through the buy signal. I don't do that. Okay? And so just please make yourself aware of that on any platform. And I don't send you to any other website besides the Market Signals Pro website. All right? So I just wanted to mention it. Okay, you guys. So again, thank you for your time here today. I hope you got something out of this stream, and I hope you all enjoy your holiday. You know, the big holiday coming up here. I know everyone's busy with stuff. Remember what I said about the holidays, but enjoy, have fun, and we'll do this again next time. All right. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.